After a tough winter, spring has sprung. It has, but the spring housing market hasn't exactly gotten off to a running start. First, bad weather got some of the rap, but now the blame is increasingly going to a tight mortgage market. So tight that it is keeping many potential buyers locked out of home ownership. Diana Olick has our story.
The signs of spring are finally here, including more of these signs. But so far, word on the street is this spring housing market is underwhelming.
The market kind of divides into the haves and the have-nots. You have the people who have good credit, good jobs. That's the move-up buyers. They're buying.
But the rest of the market is not. First-time buyers and those with lower credit scores. That's more than half of potential buyers. You see it in the mortgage numbers. Lending volume down to the lowest level in 14 years, according to a new report from Black Knight Financial Services. Only about 30% of 2013 loans went to borrowers with a FICO credit score below 720, and nearly half of all home sales are now in cash.
Easing of credit standards is not happening. It's not on the table. And it's really still that threat of what happens to the mortgage if a mortgage goes bad.
Lenders are clearly still spooked by the housing crash, which cost them billions of dollars in payments back to Fannie Mae, Freddie Mac, and the FHA.
What a lot of bankers are telling me now, I never want to service a defaulted loan again, which means I won't originate a loan that does default. I'm keeping my credit scores above 700.
Mortgage analyst Paul Miller has been revising his numbers down for mortgage volume every month. Now he's at $1.1 trillion worth. Compare that to $1.9 trillion in mortgages made in 2013.
The bigger guys are just not going to do it, and that's where the scale is. That's when you really get, the marginal borrowers below 680 FICO scores. That's how you give them credit.
Wells Fargo recently said it would start offering loans to borrowers with lower FICO scores, but only through the FHA, the government's mortgage insurer, and only through Wells's own retail channels. It's a very small share and a far cry from the heady days of subprime lending. For Nightly Business Report, I'm Diana Olick in Washington.